Joining us now to talk about that and a whole lot more in a CNBC exclusive, M&T Bank CEO Renee Jones. Renee, great to have you here. Again, what's the takeaway? Why are analysts saying that M&T didn't do as well because of some of your real estate exposure to the rest of the banks?
Thanks, Sarah. I guess I'd start by saying that, I think overall the stress tests were really positive because, the Fed designed a really, really, really tough test designed to get the most stress points, which in the economy today, real estate is among the more stressed areas. And the results were really strong. It showed how strong the banking industry was. I have to start also by sort of talking that, we probably have the strongest underwriting performance over the last 4 decades. And why the test was relevant to us is we have about 5% of our loan book in retail, and we have about 4% of it in the hotel space. And there's a lot of discussion about the more dense urban areas, of course, given COVID. For us in New York City, in both retail and hotel combined, it's about 2% of our loan book. So we've been there for a long time. We tend to be a relatively conservative underwriter. In those books, for example, have loan to values of about 43%. So think of it this way: in the properties and our customers carry more than 50% in cash or ownership of those entities. So we believe that over time, what we've learned is that they behave differently than if they were sort of funded by the capital markets over time. But what the Fed did was Go ahead, Sarah.
Oh, no, I wanted you to finish, but also if you could tell us if any buybacks are planned in the capital resubmission.
Well, it's one of the interesting things is that, different from the model, if you look at our actual financial performance this year, we'll probably be one of just a few banks that covers its cost of capital this year. So we're a very, very profitable bank. And so by the Fed's rules, we probably have the strongest ability to distribute capital coming out of this because we remained really profitable throughout the course of 2020. We'll have to decide what we actually do with that, but we do have that ability, and I think it's a critical asset.
Of course, the personnel of the Fed might change in the next 12 months or so. Randy Quarles' term is set to expire in October. Jay Powell's term is set to expire after that. And the general ethos of the last 4 years when it comes to financial regulation was to undo some of the overreach of the post-crisis era and to apply a light regulatory touch to allow banks to participate in the market again. But I'm wondering, based on what you've seen on the personnel front from the Biden administration so far, what you think their approach to financial regulation is going to be and whether they'll continue to allow some of this stuff that has been beneficial for your sector to continue.
I guess the way I think about it, Sarah, is that I have to go back a little bit. If you think about, where we were in the great financial crisis, there was an extraordinary amount of tightening of regulation, which was very, very appropriate because we had to reshape and re-strengthen the financial system. And as we sort of did that, when that work was done, we learned a lot that probably needed to be right-sized without actually, removing capital from the banking system and not weakening the system. So I think really what's happened is we've been much more effective. And a great example of that is when you think about the new proposals around CRA and the way in which the Fed engaged in that to help, modernize that system to help the low and moderate income neighborhoods. There's been a lot of innovation in that space. I expect that around social issues to continue. I think the banking system and the banking leadership today is a lot different than it was probably a decade ago. And most of us are leaning into those spaces as well. So I do expect to see some of the issues over the last 5 years ago kind of maybe reemerge. But I think they'll have a different twist around social justice, hitting low and moderate income communities, which is really what's needed. And most of us have really changed our operating models to make sure we can find ways to serve those communities.
Shepard Smith here. Thanks for watching CNBC on YouTube.